Welcome back, everyone. We have some breaking news. Adobe stock is currently in free fall, down 15.42% on the backs of some news that they're acquiring a design company, a prototyping company called Figma. Now, Figma has been on Adobe's radar for some time. This company, I think, posed a threat to Adobe, and Adobe saw this threat and they took it very seriously because the price that they're acquiring Figma for is an astounding $20 billion. That's a lot of money. Even for Adobe, that is a lot of money. Adobe plans on doing this acquisition through a combination, half by share dilution and half by cash. And the market obviously does not like this deal. The results of this is down 15.74%. Now, they also had their earnings report, which Adobe showed that most things are in line with expectations in terms of their last quarter. So we'll go over their earnings report, but that's not the big news of today. Adobe's earnings report and their forecasting was so-so. It was right in line. There was nothing special about it. The big news and the sell-off today in Adobe is a response to this acquisition. And so I want to talk most of this video about the acquisition itself, what Figma really is, how much of a threat it really was to Adobe, how much money Figma makes, the growth path of it, and ultimately, if I think it was worth it for Adobe to pay $20 billion for this company. Do I agree with the market that Adobe deserves to be trading down? Or do I think it was a good deal? We have a lot to get into. Let's go ahead and dive right in. Now, the first thing that I have to mention is that I am invested in Adobe. I have a stake in this company. I've invested over $5,000 in it. I view it as this subscription, highly scaled growth leader with very reliable recurring revenue. I think that they have large network effects, and I think that they have a pretty decent moat until recently. Now, the stock is down over 16% today, so investors did not like this news. They're selling out of it. But one thing that I've always tried to do is whenever I read news about an acquisition or about a merger or something big, and you look at the stock price going up or down, I try to just phase that out of my mind, not pay attention to it, and not let it bias my take, my view on whether I view this news good or bad. So what I'm going to be doing is ignoring the stock price trading today and trying to unbiasedly determine whether or not I like this deal. Now, having said that, like I said, I viewed Adobe as this highly scaled subscription company that is taken off like a rocket. If we look at their revenue over the past couple of years, you notice the growth trends just exploding over the past 10 years. Adobe has been a massive growth company since 2014, going from 4.15 billion to 15.7 billion in revenue. This is an established company moving from their legacy, sell one time, a package for $1,000, to now their SaaS model of charging you every single month $50 per month for their Adobe Creative Cloud. And this has accelerated their business. This is crucial to their business. Changing over from the legacy growth to the SaaS growth is really what caused this huge move upwards. That's what did it, the business model change. And you can see it show up in every single one of their metrics. The EBITDA, the same thing since 2013, 2014, that's when the SaaS model took off. When the legacy model of the one-time big package downloads was put to the back burners and they switched to the SaaS model. You can see it in the free cash flow. There's not many companies, even on a per share basis, that have grown free cash flow this quickly. Adobe is a massive growth company. When investors are investing in Adobe, they're investing off the basis that this company, it can grow profits, it can grow net income, it can grow EBITDA, and it can grow free cash flow on a per share basis without diluting the shareholder. In fact, their shares outstanding have been going down over time. So they're not one of these tech companies that's growth at any cost and they're diluting the shareholder. Overall, Adobe is an incredibly good company, deserving of a high valuation because of its stable and incredibly fast growth and its wide moat. But the moat is an important part of Adobe's story. Without the moat, if it gets taken over and the growth slows down, then this company's not such a good deal anymore. And I came across an article not even 1 month ago that made me question Adobe's moat. It actually made me concerned. I didn't share this article publicly. It wasn't a big enough piece of news, but I did factor it into my investments. It made me a little bit cautious about Adobe. Here's the article. This is from August 25th, less than a month ago. It says Microsoft employees love Figma. Figma. Not Adobe, they love Figma. And it's testing the company's cozy relationship with Adobe. Let me go ahead and read some of this article because I think it will give you a better view of what's going on than what you'll get by reading the acquisition agreement. And we'll go over the details of it, what Figma is, the purchase price, the growth, and all that good stuff. But I think this will give you a better view, a better idea of why Adobe's so eager to buy Figma and why they're willing to pay an astounding $20 billion. Microsoft and Adobe have been friendly bedfellows for decades. Microsoft's dominant PC operating system has been the gateway for Adobe to reach millions of business users with its design software. But inside Microsoft, an emerging challenge to Adobe is catching fire and raising questions about the future of one of the tech industry's most intimate relationships, Figma, a San Francisco-based startup that celebrated its 10th anniversary in August, is being used by tens of thousands of employees inside Microsoft and, for many, is the heart of their daily work. Right there, I'm reading this as an Adobe shareholder, and I'm just reading it and I'm thinking, this makes me feel less and less good the more I read this report. There's this new company, well, not really new, it's 10 years old, but it's accelerating in its usage across Microsoft, and they're calling it the heart of their daily work. That's not good if you're not an owner of that company and you own a competing piece of software. The number of users has steadily increased in recent years, though neither company will say how many of them are editors with paid accounts. The cloud-based design software came in the door in 2016 when Microsoft acquired mobile app development platform Xamarin and brought 350-person team that came with it. So Microsoft acquired this other company. They brought on 350 people. Months after the deal closed, it would become Figma's power users. So Microsoft bought this other company. They decided to use Figma as their main product. The product has since become so central to how Microsoft designers do their job that John Friedman, the corporate vice president of design and research, said Figma is, quote, like air and water to us. Air and water, totally essential. It's also used by engineers, marketers, and data scientists across Microsoft. Figma's become, I would say, sort of the number one common tool we use to collaborate across all the design community, in this community and beyond. Again, I'm reading this as an Adobe shareholder 1 month ago, and my heart's sinking a little bit because I'm thinking maybe the moat's not so big. Maybe this actually poses a threat to Adobe. And I've read no report before this of a company that seriously poses a big threat to Adobe. Continuing on, it's, quote, really great at helping us collaborate at scale, at a global scale. I can collaborate with teams we have in India, China, Europe, Israel, and Africa. So you can collaborate all across the globe seamlessly in an environment where more people are working from home. That's probably becoming more important. In June of 2021, during the heyday of mega financing, Figma was valued at $10 billion in funding round that included participation from Morgan Stanley, Counterpoint Global, that was before the 2022 market plunge that sent many cloud stocks down by more than half, and a largely altered pre-IPO rounds. So last year, Figma was valued at $10 billion, right? So Adobe's buying it for $20 billion. 1 year ago, it was valued at $10 billion. That's how fast the valuation was growing. And later we'll learn that even before this, it was valued at much less. Figma's valuation has exploded over recent years. The company, backed by the likes of Index Ventures, Greylock Partners, Kleiner Perkins, now has the size of growth and trajectory to land solidly on the radar of public investors. Annualized recurring revenues has more than doubled in consecutive years and is poised to top $400 million by 2022. According to people with knowledge of the company's financials, who has not to be named, these have been confirmed. Figma is expected to earn over $400 million in 2022, which isn't a lot, and that's very expensive for a $20 billion company. You're paying almost a 50 price to sales multiple on it. But the important thing is how much it was earning a year ago. The company is over doubling its revenue every year, almost 150% revenue growth every year. While Microsoft has served as a growth driver for Figma, spending millions a year in development, the company's software has also taken off At Google, Oracle, Salesforce, where it started small and grew organically as fans touted it to their colleagues. So this is organic growth without a huge sales team and marketing team. They're just spreading because people love the product. Other customers include Airbnb, Dropbox, Herman Miller, Stripe, and Twitter. All the big tech companies, all the companies in that sphere, they're all adopting Figma, not because of a corporate sales funnel, but because of the product being so good that it literally sells itself. And as I discussed with other people on my Discord and community, many of which that work in these companies and big tech, they said that this product is just too good. It's unparalleled. There's nothing that comes close. Adobe can't beat Figma at what they do. Now, continuing on with this, for Figma, getting traction inside of big companies, particularly with Microsoft, has required going head-to-head with Adobe's competing XD programs and winning its fair share of the deals. That doesn't mean that the market has completely flipped or Adobe is being fully supplanted. Quote, we're still heavy on Adobe Illustrator, Photoshop, and XD, Friedman says. So Adobe's sitting there, and Adobe has their products, which is Illustrator and Photoshop. But that's not much of a growth path. I know Photoshop and Illustrator from when I grew up in high school. These products have been around for a long time. The new thing, and where money's now starting to be spent in design, is prototyping, doing initial mock-ups of websites and apps. Doing that has become a pain, and Adobe products are not the best for doing that. It's not the best use case for Photoshop. I think basically every photographer uses Photoshop. It has heavy usage in those categories of artistic work. But in terms of just prototyping, there's other tools that people are using more now. And Figma stands as the industry leader. It is the best one, according to a lot of people's opinion. A lot of people that I've talked about in the industry. Now, Figma knows this, and they've been going head-to-head, winning contracts and deals over Adobe. And even on their website, they've been touting that they can go against Adobe themselves. They say Figma isn't shy about going up against an industry heavyweight. On its website, Figma says, quote, don't sync to the cloud with Adobe XD, work in the cloud with Figma. They're saying that they're already in the cloud. When you use Figma, you're working through a browser in the cloud. When you use XD, you're working locally, then you're syncing your files in the cloud. And you can't collaborate the same way as Figma. They say it asserts that designers are moving away from Adobe Creative Cloud Bundle, the product that accounts for 59% of Adobe's revenue. They're asserting that Adobe is having trouble with their Creative Cloud Bundle, their core product. They're losing market share to Figma, a much smaller company, but one that's growing at 150% revenue growth per year, maybe even higher. It's very well liked in these communities, and it's a threat, an actual threat to Adobe's Creative Cloud. If we circle back for a minute, we look at these numbers here. What's really made Adobe great? I want to just reemphasize one point. Adobe was struggling before the Creative Cloud. They were doing okay, but they're basically flat since 2008. The company grew revenue. In 2008, it was $3.58 billion, all the way up to $4.1 billion. That is stagnating growth. Not much growth because it was a one-time sales business. In 2012, they started transitioning from their one-time sales to the cloud business, and that's where growth really took off. This is paramount for Adobe. Having their Creative Cloud is what makes this business what it is. So any threat to this Creative Cloud, anything that can disrupt it, should be looked at as a critical threat to their business, their overall growth trajectory. So when you look at this deal, you need to view it through that lens. Adobe's looking at this company that is so well liked by the creative community that it's growing organically by 150% plus per year, and they're thinking this may actually threaten our moat, and we need to take it out. And how does a company like Adobe take out competition? A lot of cases, they can't beat them. It's true. Big tech isn't great at everything. A lot of times, they can't beat them. Back when Google, before they acquired YouTube, Google tried to compete with YouTube. They tried to build out Google Video, and they failed. They were losing ground to YouTube. This smaller company, it was taken off like crazy, And the Google team internally said, you know what? We've tried everything we can to build out this video platform. It's not gaining market share as fast as YouTube. We're bigger than them. We should buy them before they become a real problem. This has a chance to be a real problem for our company. They overpaid for YouTube during that time period. They bought the company for a lot of money back then. In hindsight, it's one of the top 10 best acquisitions of all time. If they hadn't have bought YouTube for fear of the valuation being too high, Google would be a different company right now. It would not have the same valuation. They wouldn't own the YouTube property, and who knows what would have happened. So when I view this news of Adobe snapping up Figma, I try to take the stance of, instead of just looking at growth rates and valuation, I look at it from a structural position of the company and their moat and their long-term future growth. Where is Adobe going to be in 10 years? And how does this company fit into them? It's not just one-to-one. If they don't buy Figma, it's not that they're just not overpaying for a company or they're not acquiring that company. It's that now they might have a real competitor, a company that other people love to use that can build out more and more product features competing against Adobe. So that's the viewpoint that I look at it through. Now let's go ahead and look at some of the specifics of this deal. We look at this article here. This is from TechCrunch, and it's kind of funny because they say that Adobe snaps up Figma for $20 billion, taking out one of the biggest rivals in the digital design industry. Both the Wall Street Journal and Bloomberg have reported on this. I've read the reports. They basically say the same thing. Those Q3 earnings saw the company post revenue. So we also had Adobe's earnings, and I can go through this real quickly, the earnings, before we jump into that TechCrunch article. Just to summarize, here's the earnings, the actual and consensus. They beat their revenue, their operating income. They missed their margins by 3 basis points, basically in line. Their adjusted earnings per share, they beat it by 2.1%, right? They barely beat it, basically in line. Their cash from operations was a beat, but basically in line. Their overall revenue, everything across the board is mostly in line. So again, this earnings report is not that exciting. It wasn't a massive beat. It was not a massive miss. They basically hit everything in line, if you want to look at that. But back to this article. While Adobe posted their earnings report, they also just coupled it with this deal. And the overall reaction right now is as you would expect. Users of Figma love the product so much that they're furious that Adobe's buying it, because they consider Adobe products to be more bloated, antiquated, just old-fashioned. They're more clunky. They don't work as well. And Figma's like this newer, very lean company. It's all cloud-based. It works really well. So people are upset that Figma's being purchased by Adobe, which I completely understand. I see it differently as a shareholder because I'm looking at making money. But if I was a Figma user, I'd probably be upset that Adobe's buying it as well, to be quite honest. They say, though, here that the company said that it might need financing this deal with a loan, and it provided a lukewarm outlook for next quarter, with revenues expected to be $4.52 billion, earnings of $3.5 per share. The overall macroeconomic environment, FX headwinds, we've heard all this stuff. The dollar's so strong that Adobe makes a lot of their money's overseas and it's not worth as much. That affects their earnings. The stock is down now 15% plus. And here's some of the memes and reactions being posted online. When Adobe bought Figma, and it has the crying CEO that has now become a meme. A lot of people are not excited because they think Adobe's going to take over and ruin it by overcomplicating everything. I don't think that'll be the case because for the next 4 years, the Figma CEO and team is staying on the company. So I think they'll protect the product for at least the next few years. But regardless, let's go ahead and look at some of the details about Figma. The acquisition is coming in the form of a deal that is half cash and half stock. And it is also including $6 million in additional restricted stock units granted to Figma CEO and employees that will vest over 4 subsequent years to closing. It is expected to close in 2023, subject to the receipt and required regulatory clearances and approvals. So there is a chance that regulators will block this deal, but I think it's unlikely given how small of a company Figma currently is. And I use the word currently there because the company's growing very quickly. At a $20 billion price tag, it's a sizable jump for Figma, which was last valued at $10 billion just last year when it raised $200 million. So it went from a $10 billion valuation and being sold completely for $20 billion. But Adobe is doing more than just taking out a big competitor. It's picking up a fast scaling business. This has to be said in terms of valuation. If you look at valuation, you should include growth in that calculation. It notes that Figma's total addressable market is $16.5 billion by 2025, and that, quote, the company is expected to add approximately $200 million in net new annual recurring revenue this year, surpassing $400 million in total ARR in 2022. So they're growing their revenue at double the rate. And then they have best-in-class net dollar retention of greater than 150%. That's faster net revenue retention than Snowflake. That is the fastest that is basically in the market right now. It's faster than CrowdStrike, faster than these other companies. Of course, they're much bigger, but right now that net revenue retention rate, which is a huge metric, it's very good. So customers are spending more and more. The same customers are spending more and more on Figma every additional year. They're increasing their spend on it. With gross margins of approximately 90% and positive operating cash flow, Figma has built an efficient, high-growth business. So this is not only a fast-scaling business, but they have high margins and they have positive operating cash flows. It is a fast-scaling, high-growth, profitable company. But that isn't the reason that Adobe's buying it. I can't stress this enough. If you look at this deal in a vacuum and you just run the numbers on it, you do a discounted cash flow of Figma and you try to calculate why Adobe would pay that much, that's missing the point here. You're missing the point because Adobe's not buying this company to do it as a little investment. The reason they're buying this company is to ensure that Adobe remains the dominant player in the whole creative economy, from design, prototyping, from image creation, from anything that's an artistic endeavor. Adobe wants to cement their position and reaffirm their wide, unassailable moat. And they do that by taking out competition, taking out any potential threat to their moat. Figma presented itself as a real potential threat, getting in companies like Microsoft and all the rest of big tech. So what Adobe's really doing here is ensuring the economics of their business, ruling out disruption of the future, and making their moat even more wide than it was a month ago, which it was already a wide moat, but it was being challenged by one company. Now that they own Figma, the best design prototyping software, their moat is arguably much bigger. So the lens that I'd look at this with is they're not paying for Figma, they're paying for moat. That's what Adobe's buying. That's what's enabled them to have these type of growth rates, to have these type of cash flow per share growth rates. It's moat. It's being able to rule out any competition. So overall, when I think about this deal, I don't have the same reaction that the market has right now. I think selling down 17% today is an overreaction. I'll probably be buying more Adobe because my view of it, even if this is an expensive deal in the short term, when I look at the landscape and the different things that could threaten Adobe, I view Figma as one of the main things. And owning this company, I think, will be a huge asset. And with Adobe as the owner of Figma, I actually think Figma's product will remain just fine. I think it will continue to do what it's doing because they have the same CEO, they have the same management, they're going to report to Adobe, they might integrate a few things, but I think Adobe won't be so eager to mess with the product. They'll probably keep it the same, use the same recipe that's working so well right now. So overall, again, I try to detach from the rest of investors and give my own perspective, my own take on it unbiasedly. I think a lot of investors make the mistake of letting the stock price go down dictate whether or not they think this is a good deal. They see that it's down 17% and they go, this must have been a bad deal. The rest of investors are selling out. I don't really agree with that. I think it's an expensive deal. I think that if you look at it in isolation, they overpaid. But if you look at the bigger picture, they're doing a lot more than buying a single company. They're widening their moat, which I think is very important for a company like this. So that's my thoughts overall. Let me know if you disagree or agree. If you think this is the worst deal in the world, let me know in the comments below. I'll go through and read each one of them.